Now let us go through our entry sequences. This is going to tie all the components together that we've been going through, and it's going to begin to make sense. You're going to understand exactly how to use this methodology. There are two potential entries to be taken when price reaches a relevant point of interest. The first is entering on the swing formation at the closure of candle 2 or candle 3, which starts the reversal. Swing entries prior to closing through the opposing candles provide higher reward, but come with greater risk as the high or low is yet to be confirmed. So this is the setup and how it looks. So you can see this would be a relevant low in the market that we mark out. This would be a relevant high in the market. When price approaches this relevant low, you'll see we get this reaction at the low. You always want to look to see how is price reacting at these low points. Once we see this massive wick being formed, the swing point, we can see that price is in fact responding and reacting to this low. We also notice there's a failure to displace happening, so we get the candle 2 closure confirmation. And on the other side, you can see price comes up, reaches a swing high point. You can see the swing high is being formed, and then we get a confirmed candle 2 closure. This is the prerequisite that we look for this entry setup. The second is entering on the close through the opposing candles following the reversal. Entries on the opposing candle formation generally provide less reward, but there's with less risk as the high or low is confirmed. With the close through the series of opposing candles, the high or low is confirmed and the invalidation point is provided. So this is the example over here. So you can see we've got the low being formed. Price comes, it takes out that low. It forms a relevant swing point, candle 2 closure, confirmation. But then what we do is we can wait for candle 3 to close above the CISD or these opposing candles. So you can see this was the run of candles that took out this low and caused this manipulation. So when price gets above that run of candles, getting above these opposing candles, and this can be a stronger confirmation for this change in state of delivery from this downward momentum, creating a swing point and moving upwards, getting past the opposing candles, closing above that, and then we can look to trade candle number 4. For this bearish example, you can see price comes up, takes out a high point, forms a swing. We can see price is reacting to this level, this manipulation is taking place. We got this failure to displace, candle 2 closure, but then if we wait for candle 3 to close below the low or the opposing candles that caused the run that took out the high, and we mark out that level. If price closes below that level, that can be an even confirmed entry. These entries will not have as much reward as entering on a candle 2 closure, but they will be safer and you will be catching more of the continuation instead of the actual reversal. The following entry steps are only valid at relevant point of interest, such as a high or low or fair value gaps. Only use opposing candles if there's neither a fair value gap or a high or low as a point of interest. So as an example, you can see we've got the swing low being formed, candle 2 closure, failure to displace. We get this nice candle moving up, this candle 2, which engulfs candle 1, and then it leaves behind a fair value gap. Price retraces back into that fair value gap and forms a swing. So now we see that there's a swing being formed in this relevant level, which is this fair value gap. We can see swing point is candle number 2, failure to displace candle 1. And then we use candle 1 as our opposing candle run because this was the candle, a series of candles that directed that downward motion that caused the swing or the manipulation. Candle 2 engulfs candle 1, closes above this opposing run. So now we can look to enter candle number 3. In our bearish example, you can see here we've got our swing high being formed, failure to displace. We get a nice movement to the downside. It leaves behind this fair value gap. Price retraces into the fair value gap, which acts as our relevant level. We can see it forms a swing point in the fair value gap, failure to displace, candle 2 closure confirmation. We mark out the low of candle 1 because it's responsible for the candle or series of candles that would cause that manipulation. Since candle 2 closes below the one, that also confirms this engulfing candle, and then we can look to enter candle number 3 for confirmation. This is how we use these entry steps for opposing candles now. So you can see we get this run of candles that caused the sweep of the low. It took out this relevant low. So we mark that opposing level, and we wait for price to break above it. That is the point where we can get confirmation we want to enter when price breaks above there. You can see price broke above, it retraces back into that level. So this level acts as a support or resistance point. It breaks above it, it comes down, it acts more as a support. We can see a swing is being formed into that level. Candle 2 fails to displace candle 1. We get this candle 2 closure happening in that level. And then we can mark out the opposing run, which is the opening of candle 1. And when candle 3 closes above it, we can look to trade candle number 4. So this is how we can incorporate opposing candles, which is just another way of using CISD levels. On a bearish example, you can see price comes up, it swings and takes out that relevant high point. It forms a swing point, candle 2 closure, and then candle 3 closes below the opposing run. You can see this is the bullish run that took out this swing high point. If candle 3 closes below that level, that is letting us know there's a change in state of delivery, and we can start looking for our short positions. It's just a stronger confirmation. Then price retraces back into that level, and it acts as more of a resistance. It forms another swing point at this relevant level, failure to displace, candle 2 closure, and then we can mark out the low of candle 1, which would be another opposing candle. If candle 3 had to break below the open of candle 1, that is a confirmation for us to trade candle number 4. So let us look now how we use a candle 2 closure entry. Enter on the opening of candle 3 with the stop loss on the candle 2 swing point. So you can see we've got a low in the market being formed. This is a candle number 2. We get a failure to displace from the low of candle number 1. So what we want to do is we want to enter at the opening price of candle number 3, and our stop loss comes at the low of candle number 2. Then we can look to trade candle number 3 and into candle number 4. For our short example, you can see we've got a swing high being formed in the market. A confirmed candle 2 closure is taking place. So therefore, after candle 2 closes, we want to enter on the opening price of candle number 3, and our stop loss goes at the swing high of candle number 2. And then we can trade candle number 3 and candle number 4. Now let us look at candle 3 closure entries. Enter on the opening of candle 4 with the stop loss on the candle 2 swing point. So as you can see, we've got a low being formed in the markets, candle 2, failure to displace. Then we see candle 3, which engulfs candle number 2. So you want to see candle 3 body close above the opening price of candle number 2, and this confirms this is a candle 3 closure. Once we get that candle 3 closure, we want to enter at the opening of candle 4, and our stop loss becomes at the low of candle number 2. In our bearish example, you can see we've got a swing being formed in the market. Candle 2 fails to displace candle 1, then candle 3 body closes below the low of candle number 2. That confirms a candle 3 closure entry. So what we want to do is we want to enter at the opening price of candle number 4 and place our stop loss at the high of candle number 2. And finally, using the CISD or opposing candle entry. Entering following the confirmation of a relevant opposing candle, either markets on the opening of the first candle following the validation, or a limit on the opposing candles. We have the series of candles that causes this low to be taken out. It forms a swing point, failure to displace. So these series of candles, we mark the opening price of the start of the series of candles. This becomes our opposing set of candles. Once we see price break and close above that level, this is precisely the level where we look to take an entry, and we place our stop loss below the low of the swing low. And then for our bearish example, you can see this is the run of candles that causes the sweep or leads up to the swing high point. So we mark out the low or the opening price of those bullish candles that caused that run. We wait for price to close below this level to confirm it as valid, and then we enter exactly on that level. We place our stop loss above the high of the swing high. Let us now have a look at the setup on the charts in the market. So you can see over here, we've got our higher time frame candles. You can see that we get a sweep that's taken place. And then price closes above, which this is a candle to closure. So what we want to do is we can look on the lower time frame here. We can see this is where the sweep takes place. So we mark out the CISD at that run of candles that caused that sweep to take place. We mark out that level, and then we wait for price to break above that level. You can see now we got a break above that level, so we can look for an entry. that would be catching the reversal entry. If we're looking for a continuation entry, you can see over here we've got this equilibrium box that is projected onto the charts now. So we want to look for an entry within that box. Because price takes off, it takes out the high of the liquidity, and then we'll retrace back into that box. You can also see we've got a fair value gap, and we always want to tie our confluences with either fair value gaps or sweeps happening within these EQ boxes. You can see price retraces back into the box, taps into the fair value gap. This would precisely be a place where we can look for an entry. Our initial run would be looking for our CISD entry over here. This would be the candle or series of candles that comes down and taps into that fair value gap. So we would want to see that opposing candle being taken out to look for our long position. Let's see what happens. So price comes down, and you can see what happens now. Price comes down and takes out the low of those candles. You can see takes out, causes the sweep within the fair value gap and within the EQ level. So then we mark out this opposing set of candles as our new relevant place to look for our long position. So if price breaks these opposing candles, this is where I'd look for an entry, because this is the run that caused the sweep to take place. The sweep is taking place in this EQ level and tapping into a fair value gap. So we'd wait for price to break that opposing level or the CISD level. You see it breaks it. So this is exactly where we would look for our entry. We would get our entry exactly on that level. You see it enter. Stop loss below the lows that caused the sweep, and then we would target the next liquidity levels. And if we move it up, you can see, there you go, price just takes that out. Fantastic. So this is how we use this entry sequence to get the best results. Let us just review this again on the higher time frame candles. You can see we got a candle 2 closure and a sweep take place. So this would be candle 2 that would happen. You can see the equilibrium was marked out. This was the equilibrium level. You can see candle 3, which is this candle. Candle 3 respects that upper half of the equilibrium, and then we can mark out the equilibrium of that candle. And you can see over here, this would be the equilibrium of candle number 3, and candle number 4 respects it, and then it just takes off, and we see this expansive move. Just notice within expansion, we're always going to see very small wicks on those candles. That is a sign that's letting us know expansion is going to take place. Price just expanded and took out these liquidity points. If we wanted more entries, we could have looked for opposing candle entries. This would have been an opposing run, and this would have been another opposing run. But as price gets closer towards these liquidity lines that we use for targets, it's less opportunity for us to take entries, because if we enter over here, we can only catch a very small move. But if we enter on this break, we catch a bigger move. But if you see over here, we had one entry on this CISD, another one, another one, and another one. Essentially, there were 3 entries to get to these liquidity levels, which were our targets where we expected price to go to fill that liquidity.